Now available on Tata Sky channel number 526.
Union Budget 2016 has a few proposals that incentivize the first-time home buyer. So if you are in the market to buy that dream home, you don't want to miss out on what's coming up next on this bulletin. Our tax expert, Vinay Singh, joins us live on the phone line to break down the tax implications on buying, selling and leasing property. Vinay, thank you so much for taking time out to be with us. First up, tell us, what are the taxes that I have to pay while buying a house, and how do I save on these taxes post-Budget 2016?
Well, the taxes that you normally would end up paying are VAT, and that would vary from state to state, although quite a few states have got a composition rate of 1%. Service tax is the other tax that you would need to pay when you are buying a property, and that now with the new budget will range from 3.75% to 4.5%, depending on the size of your flat and the value of the flat. Now, these two taxes can be avoided by you if you decide to wait till the builder has obtained either the completion certificate or the occupancy certificate, because these taxes are not applicable on ready properties. It's also probably a wise move given the current scenario, so you could look at that to save tax.
All right, now let's get into more specifics then. What if I take a home loan to finance this dream home that I'm looking to purchase? What are the tax benefits that I get after Budget 2016?
Well, the new thing in Budget 2016 is that you have a new section coming in 80EE, which is a section which will give you a deduction of 50,000 rupees in terms of interest that you pay. This is available to first-time buyers, first-time home buyers, and it's restricted to cases where the property does not exceed 50 lakhs in value and your loan size does not exceed 35 lakhs. So essentially, I can see that this will probably smaller cities or in the outskirts, because anything in, say, a city like Mumbai, nothing is there available, less than 1 crore of rupees right up to Borivali perhaps.
All right, when I say I'm investing in property and I lease it out, do I still get the benefit of deduction on home loan?
Yes, you do get a deduction. In fact, it gets better when you lease it out. For the simple reason that if you have rented it out, you are earning rental income which you are going to pay tax on. So the normal limit of 2 lakhs, which is available on self-occupied property, it does not apply to you, and you could claim the entire interest on your home loan that you're paying without any limit whatsoever. This is also true if if it's a second property and not sublet but lying vacant. So long as the second property is called deemed let out, there too you can claim interest without any limit.
All right, Vinay, tell us, what are the kind of taxes that we'd have to pay if we sell property?
Well, if you're selling property, the first tax that obviously comes to mind is capital gains tax, which will arise on the profit that you make. Now, obviously, if you are if you've not held the property for more than 3 years, the capital gains is called short-term capital gains. Basically, it will just get added to your income, and whatever slab you land up in, you will pay the tax accordingly. You will not be entitled to claim any of the other deductions which are available in long-term capital gains. Once you have held a property for 3 years, you could claim deduction by investing in capital gains bonds up to 50 lakhs per transaction. You could also invest in another house property and get away by paying no capital gains. All these things are available, however, only for long-term capital gains. One thing I would like to point out as far as Maharashtra is concerned, that under the Maharashtra Stamp Act, if you have purchased something in investment and you're reselling that property within a year, the stamp duty that you paid at the time of purchase is possible to be set off, and to the extent the new buyer can claim that reduction when he's buying it from you. So this is one benefit that most people may not be aware of, but definitely it's available.
Vinay, sticking to that, tell us, both me and the audience watching, how do we save on long-term capital gains tax and short-term capital gains tax?
Well, short-term, as I said, there is no possibility of saving any tax because there are no deductions available there. But once you held it for 3 years and you have made long-term gains, you could buy capital gain bonds. Normally, you will find that National Highway Authority of India or Rural Electrification Corporation are the two types of bonds which are normally available. So you have a limit of 50 lakhs. Up to 50 lakhs of your gains you can invest in these bonds. These bonds are locked in for 3 years. They'll give you interest perhaps by about 5.5% to 6%. But after 3 years, they are free for you to do what you like, and you do not have to pay capital gains tax on the amount that you've invested in these bonds. So this is one deduction. The other deduction available is if you sold any asset, and you, other than say a house property, and you're investing it in a house property because you don't own more than one house at that point, the amount that you're investing there, you will be able to claim a deduction under Section 54F. So these are the principal two deductions that you can claim.